We are just 5 days away from Tesla earnings, and I will do a full show on my expectations, my analysis, etc., what I'm hoping for on the earnings day call, as well as in the report. Plus, I'm going to have multiple guests starting tomorrow, almost every single day. I guess every single day up to earnings day. You're going to be hearing from Warren Redlich. You're going to be hearing from Herbert. You're going to be hearing from Wang about their expectations, their hopes, what they're thinking is going to happen on earnings day. So watch for those videos. And so if you like, right now, you can tell me that you like this financial thing I do on Fridays. If you subscribe and you hit the notify button, then you'll be notified of all those upcoming shows that you're going to be hearing with these guests. And then, of course, please join Patreon. This isn't free. Putting the show is not free. By the way, did you know that? It costs me money. I actually have a team in the Philippines who helps me put the show together, and they cost me money. So if you could help out the show, you help, believe me, by just liking and hitting notify and just by watching. All of that is hugely beneficial, but the Patreon thing is helping me to make this a worthwhile opportunity. All right, let's get into the guts here. We're 5 days away from the earnings report, but guess what? We're also potentially 3 days away from the Starship launch, which may go on the 17th. And believe it or not, and if maybe you follow this as closely as I do, other people follow it even closer than I do, but the Starship launch might be just as important as the ChatGPT and/or Optimus. I mean, these are big events in human history. The Starship thing will open up the heavens in ways that they just haven't been opened up before. Open up the opportunity for point-to-point, like going from Los Angeles to Singapore in 45 minutes. The Army has already told Tesla, they've already given the money to set up the opportunity for the Army to use them for deployments, 45 minutes any place on Earth. So anyway, it's just a huge event, way beyond just the Mars issue, way beyond Starlink. It has many other aspects that you should be paying attention to that'll affect the overall economy and will affect Tesla. All right, what happened today? Well, Tesla tried its hardest to get back into the green, but alas, it didn't quite make it. It was down just a little bit. But like all week, and I predicted this last week, if you watch my Sunday night show and my Wednesday show, I said Tesla's going to follow the macro right up till earnings day. There's not going to be any anticipation. People are not going to buy anticipating a big earnings beat. It's going to be basically follow the macro until earnings day. And that's what happened this week. That's what happened today. When I say the macro, I'm not talking about the Dow. It comes closer. Tesla comes closer to following the NASDAQ. But then if you follow me on Twitter, you know that every day I put up the Randy Index, which is an index of about 8 or 9 funds and our companies who are risky growth companies. And that's how Tesla is perceived by the market. And Tesla follows those extremely well right now. Not always, but right now, for the last 6 months, Tesla has been following those risky growth companies quite well. So that's how they're perceived. All right. Now let's see. So what happens on earnings day? So just a quick anticipation. Like I said, I'm going to do a whole show on this, but if the earnings are over $1 a share and there's good guidance and a good earnings call, all three have to happen. You have no negatives in the earnings call to drive people crazy. All right, then we can start to see my anticipated growth of Tesla stock up to the $300 level. That will continue after the earnings call too. I think the earnings call too, I'll explain all this in my video. The Q2 earnings call and earnings report will be more important than this one. This one will be important. It's critical that we find out what the average cost of sale has been on the cars. It's critical that we start to find out what the real margins are on the cars after all these decreases. It'll be very interesting to see what's happening with regard to the energy margins. And it'll be very interesting to see about operating margins, because that's what they told us to watch. So those 4 things are what I'm going to be looking for on Wednesday. But then I think we'll have hints this time. We won't get the facts, we'll get the hints of what's happening on those trend lines, which right now are the most important things affecting earnings. And then after quarter three, we'll start moving towards my $400 goal for the year. And by the end of the year, hopefully we hit the $400 number. Now, my estimates could be completely thrown out the window if we get an announcement about Optimus going into production, a reveal anytime along the way where they start taking orders for Optimus, and they could be definitely affected if FSD hits level 5 and Elon says it's okay to drive your car from the back seat now. All right, so aside from those two massive opportunities, I see Tesla continuing to trade with the market until the market decides that the new bull needs to start. When the new bull starts, then Tesla will get a ride along with that new bull. All right, let's see here. So what about Tesla's news? Well, this is Good News Friday. And so we always want to look at what happened. Man, Tesla, as always, had so much good news this week. We'll start with the Shanghai mega factory. Now, it was like, okay, they're going to add to the factory in Shanghai, and they're going to build these mega packs there. But if you follow me, you know that this is true. But for those of you who don't follow me, a mega pack factory is exactly the same amount of volume and potentially more profits than first phase Austin or first phase Berlin. This is not a small announcement. If they had announced a year ago in a bull market, when they announced first phase Berlin and or first phase Austin, those were big announcements and they moved the market. Well, this didn't move the market. Why didn't it move the market? Because the market is negative right now and it's not interested in these kind of bullish pieces of news about some future thing going on. They're worried about the recession. They're worried about interest rates. They're not interested in go-go stocks, risk off. And so the mega factory doesn't get news, but it is massive news. If you add the existing mega factory to this mega factory, giving us 100 gigawatts or 80 to 100 gigawatts of production capacity, that's the equivalent of a fully built out Austin, without in terms of model wise, 500,000 cars. So it should be big news. So number two was Bradford Ferguson reporting and confirming what most of us thought was that 12 megapacks are leaving Lathrop every single day. 10 to 12, but 12 seems to be the number. And so right there, you've got basically Lathrop half ramped. His expectation is that they will be able to complete. I got this wrong and he corrected me today. The single line needs some additional equipment at the end of the line in order to double production. That equipment, theoretically, according to sources he tried to get as a reporter, those resources should be added to the line in the third quarter. Hopefully that happens sooner, but if it doesn't, by the third quarter, we should be ramping to full 40 megawatt capability, therefore about $20 billion a year in sales, and probably somewhere between $8 and $10 billion in profits from that one facility. All right, and the third piece of good news was that FSD is getting better and better with each release, and we're seeing these releases, these dot releases coming out about once a week. Everybody I've talked to, some of the people who have had FSD and are out there using it on a regular basis, some of the people that are reporting it on YouTube are all saying it's smoother, more human-like, more safer, but several glitches and problems still exist. We should start to see that smooth out as this release gets more and more mature. The V11 version 11 gets smoother and smoother as we see more of these weekly releases. Fourth piece of big news might have been a sighting of a Highland Model 3. And why is that such big news? Well, first of all, it looked really good, and everybody that saw it seemed to think it looked really good. But the other thing would be that it's confirmation that this is actually taking place. Multiple Model 3s that have camouflage on them have been seen operating in the wild, which suggests that they're being tested and that they're getting ready to release the Model 3 Highland. But there's been no official announcement at all from Tesla that there's even such a thing as a Model 3 Highland refresh that might be less expensive to build, potentially less expensive to manufacture, I'm sorry, that the price would be coming down on this Model 3 Highland. There's a lot of conversation about where would the Model 3 fit in a world where there is the Generation 3 vehicle. I'm going to do a whole video on that. I think we need to see, roughly speaking, you'll have a $45,000 Model Y, a $35,000 Model 3, a $25,000 Gen 3. And maybe that all shifts a couple of $1,000s either way, but there's plenty of room for 3 vehicles that would spread those 3 price points. So then let's see, number 6 here, Brian Wang made news the other day on my show. Did you notice he made news on my show the other day? Well, that particular show went crazy. Lots and lots of views. If you haven't seen it about the Cybertruck, look it up. The Cyber Beast, as Brian likes to call it. You need to take a look at that video. He believes that the Cybertruck will get massive share, like really massive share in every single truck segment, in the Class 4 segment, in the working truck segment, and in the luxury vehicle, just for fun, lifestyle statement segment, all 3 major segments in the United States. There's a $3 million worth of trucks in that segment. If Tesla gets 25, 30% of that, that would probably be fine. Everybody would probably be happy with that. Brian thinks they might get more because their Class 4 vehicle is going to be so much better than anybody else's Class 4 vehicle. And then I'm going to do another video coming up probably a week from now. I'm going to be talking about the fact that Tesla will have so much more productive capacity on on Cybertrucks. That alone is going to put it in a leadership position in the electric truck market. All right. And then finally, the number, I forget what number 7, I think. More good news, according to what you believe. So more price decreases in Europe, more price decreases in the United States. The good news would be Tesla can afford to do that. The good news would be that the folks at Tesla know what it's costing to build these vehicles. They know what margins they're willing to work within. They know that they've got the margins to do it. And they know that in order to move 100% of the metal that needs to be moved between now and the end of the year, that's the price they need to be at for now. Now, you might see these prices start to creep back up again as people get used to the idea that there's Teslas in these price points again. Most of these price points are really just bringing us back to where we were 3 years ago. So anyway, but that I think would be good news is that Tesla believes that they can easily do this and still make massive profits, probably 2 to 3 times the average profit margins for the auto industry. Did you hear that slip? Bicycle industry? Well, I was only in the bicycle industry, still am. So over 45, 50 years. Anyway, let's see. Let's talk about the market. Okay. The market in general is as confused as I am. The stock market's showing it. The bond market is showing it. The crypto market is showing it. Every market that's around is showing that the folks that are trying to make the right bets right now are just confused about what the right bet is. When you're confused about what the right bet is, what do? You go to safety. You go to something where you can put your money aside for a while in the highest rate of return you can possibly get. And again, that's why I believe that bonds, the 10-year bond has been so strong. Yields now moving up again to 4.5. You can invest your money at 4.5% when inflation is maybe at 3.5 now, maybe 3. And then you get the upside that if interest rates come down, you make extra money on those bonds. I am not an investment advisor. This is not investment advice, and I have no position in bonds, just for your own information. Okay, so, but it's a great place to stick your money for the time being. And some people think that the cyber currencies are another great place to stick their money. And so you have the currencies right now trading over back up to over $1,000. I'm sorry, over $10,000. So, and I don't follow the cyber side of things at all. So excuse me if I get things confused there. All right. So let's talk though about what we do know. What we do know from this week is the bank earnings were fine. And so the market went up. That was early this morning. And as soon as the bank earnings started coming out, the market starts going up. Then comes out consumer anticipation of inflation, and that was down. And so the market liked that. So that was good. And so consumers must be seeing in the grocery store, in Target, at the gas pump, wherever they're making decisions about what they think is happening in inflation, they must be seeing that it's at least flattening to some degree. So they're now expecting inflation at about 3.7%, which is under the 4%, 4.5% that where inflation might actually be. But that's what they're seeing. CPI and PPI were both way better than expected. So that would be something the market should like. So all these things should be good things, right? All week, you would think the market would be going crazy because you're getting all this really good news that the economy is holding in there. Inflation appears to be coming down. Bonds are kind of trading in a range. They were up today, but only by a little bit, and they're really range bound. They've been in a range bound for a while. The inversion continues. That would suggest a recession, but man, the inversion has been since last July. So it's so confusing. It's confusing. Then the Fed adds their 2 cents worth twice this week and says we may be going into a recession because of the banking crisis. Jamie Dimon comes out all worried and said that the inversion and says that there's a recession, bad recession coming, one of the worst ever. The inversion says recession. The dollar is dropping. The money supply is not increasing, might even be decreasing. The rate of money turnover is low. All those things say recession, but the employment numbers do not. Consumer confidence does not. And retail sales being down a tiny bit this morning, that doesn't tell us enough in 1 month to tell us anything either. In fact, if anything, I would say that was kind of saying the economy's fine, that retail sales were down. I think, I'm sorry, I may get this wrong. Retail sales were only 0.1% off of expectations, I think. Sorry, put in the comments below, help the rest of my crowd get it right. You know, I shoot this raw and put it up raw, so I'm very sorry if I got that wrong. Okay, what to watch for? I've been saying this for weeks, watch spring activity. This is going to tell us everything we need to know. Travel's doing great. Travel is still inflationary. There's places are selling out. Hotel rooms are selling out. Airline tickets are selling out. Everything's selling out. It's going to be a great travel season. That would indicate that the economy is still doing okay. Entertainment is probably going to be fine. Watch for housing. What's going to happen with housing? There is nothing for sale. Some people are saying, there was a report out today saying that they did a poll and consumers are saying they're not going to spend more than 5.5% in interest on the mortgage. So what's happening is the current owners are buying down those interest rates. New home folks, the folks that are selling new homes, are buying down the interest rates down as low as 5%. You can actually, if you're buying a home, you can buy down your interest rate if you want to keep it under 5.5%. That's easy to do. There's a lot of shenanigans, and not even shenanigans, just methodologies for hitting that number if it's so important. The reality is, when mortgage interest rates were over 10%, people are still buying homes. If you need to buy a home, if you think it's a good time to buy a home, people are going to buy homes. There just isn't any homes to buy, and that's what's keeping the home prices up as high as they're staying. They're not dropping that much. I said this months ago, that normally you would see housing prices drop off a cliff, especially because they were so high, but that's not what you're seeing. And the reason you're not seeing that is because there's no supply. If there's no supply, a modest amount of demand is going to take it all off of the market. Other things you can watch are canaries in the coal mine. Some of the canaries in the coal mine would be truck tonnage. If you start to see truck tonnage dropping, that is a clear indication. Bond yields, if bond yields start to move up badly, big time, that would be an indication. If you start to see the inversion, closing, that would be really good news. Oil prices, they're stuck around 81 again. we've been at 80, we've been between 70 and 82.34 for at least 6 months now. So as long as they stay where they are, fine. If they start to go up again, I would call that a really bad sign. Look also for bankruptcies. That's an obvious early indicator. If some companies are starting to close their doors because they can't afford the labor, or they can't afford the interest rates, or they just got killed by all the whipshawing that's gone through the last 2 or 3 years. If you start to see a lot of bankruptcies taking place, if you see headlines about that, that's another canary in the coal mine. Well, I think that's all I got for you today. Be sure to watch for these other videos coming up with Brian Wang, with Warren Redlich, and with yeah. Anyway, lots and lots of great videos coming up over the next few days. Like, subscribe, hit notify if you want to be notified about them. And if this content is really, really used for you, buy the book. There's way more good content in the book. And not only buy the book, but also hit me up on Patreon and spend $5 a month to make sure that I can continue to provide this kind of content. And in the meantime, it's been great talking to you.